Hey everyone, this is Ben from Cheddar Flow, and pretty crazy open for the futures on both NASDAQ and the S&P. So pretty crazy. The S&P 500 gapped down 100 points. I don't know how many points NASDAQ did, but it was 3.2% down at the open for futures at 6 p.m. Eastern on Sunday night. So pretty crazy. And if you remember on our Twitter account, we actually went over a lot of this put flow coming in on Friday, and we posted it on Friday. A lot of people in the comments were like, oh, don't worry about that. That's just people hedging or they're getting rid of their positions. I wasn't so sure about that. I made a point in the video to talk about how much premium was going into it and also how far out of the money the contracts were. People weren't that concerned about it, which is typically your first indicator that they're probably wrong when a lot of people are thinking one thing. But it's been very volatile in the market, so it could have gone either way. However, I had more of a bearish emphasis going over the weekend. If we didn't gap down today, I still would have been bearish going into Wednesday. So we did gap down quite a bit. These are going to be way up in terms of how much they appreciated over the weekend, and we'll see if they do end up hitting in terms of the strike. And that's what I want to go over in the video today. All right, so we're going to go over this flow here again. It's going to be a little bit different than what I did in the Twitter video if you did watch that. And then I'm going to do some chart analysis as well, because this week is crucial. If you remember, last week, first of all, was very volatile. It also marked 2 years since COVID kind of occurred in the market or started to have that sell-off. This next week is a pretty big week as well seasonally. So this is key, this flow right here, because first of all, I have it filtered on Cheddar Flow for over 1 million in premium. And as you can see, in terms of all of the over 1 million in premium orders, they were all puts on Friday, which one is very interesting. If it was only a few orders, that wouldn't really be that big of a deal. However, it takes over the entire page, which is pretty interesting. So each one here, over 1 million. Also, look at the spot price that they were buying these puts at. It was 437 here, 436, 435, and they were getting 413s, 433s, which is a bit closer here, 415s, 405, 413. So very far out of the money for the majority of these orders, which is interesting because money like this, over 1 million in premium or multiple millions of premium, it's very rare that they go that far out of the money because they need to protect themselves. This is a big bet that they're placing, especially because the expiration is very close. This is literally within a month, less than a month, that they're doing the expiration for the majority of these orders. So they're not giving themselves much leeway, and something had to happen by either over the weekend or by the end of this upcoming week here, just for these to actually work out to their benefit. So they were betting big on most likely the weekend because they probably knew this gap up or gap down would have happened because these are most likely institutions with this kind of money. But it is very odd to see this amount of premium in orders. You can see how many contracts are bought, like 10,795 contracts on this single order here is nuts. 9,000, 8,000, 11,000. That's a lot of contracts because of how far out of the money they are, because they're cheaper. They could buy a lot more for that amount of premium. So these are, you need to just be careful whenever you see this. It doesn't have to mean that the market's going to go down. In my opinion and experience, it typically does if you see stuff like this, this amount and quantity of them. However, you could even hedge a long position just because of this. We saw all of these come in on Friday. Everybody seemed to be bullish on like Twitter and stuff, just because we were up like 2.2% on the day. It was a second day where we rallied it and everything. But this is very concerning to see all of these. Just because of how much premium, like you have well over 20 million in premium here, maybe even 30 million if you go through all of these. So, yeah, the biggest things with this is, one, far out of the money. That's the key thing. Two, we have the premiums over 1 million. And then three, the expiration within a month. I'd even give it within 3 months for this to come to fruition. But the fact that it was within a month is even bigger. Means that a very large move can happen in a shorter time frame, just in my opinion. So another thing that I do want to go over here is our dark pool levels feature. And basically on Friday we had not that much at the 428 level, which would act as a support roughly for that prior day. Remember, these are signature prints, so they mean that they occurred the day before. So this actually occurred on Thursday, and they weren't really buying as much. 3 billion isn't as much as some other days that we've seen. For example, we saw on Wednesday, technically, it comes through on Thursday, but on Wednesday we had 8 billion at the 421. So this was a big buy, most likely. However, I would not doubt that we actually see on Monday a bunch of orders coming in near the high, like 435 to 437, a bunch of orders with a lot of premium, and those were most likely sells that occurred on Friday. And that's unfortunate that it is the day behind just because of the signature print order rule that they have. They can have those prints occur and hit the tape over 20 or up to 24 hours after they occur. That's on the dark pools. That's just the rule that they have. They kind of get leeway with that, but this is key to note for this day because this promoted the rally that we had. Because of this big buy that we had here, this rally happened for 2 days, went up quite a bit from that level 421 to 438 almost. So that's quite a big rally from that. And now we're just going to have to see how it does in this range. We're probably going to see a big seller up here, and then maybe we'll see a big buyer eventually, whether that be lower than the current low that we had or in this range of maybe 420 to 425. We'll have to check up on that, but this is going to be pretty crucial to see how much accumulation is occurring with the levels that we have, and that can give us a sense on where a temporary or long-term bottom can occur in the market right now. And the third thing I want to go over here is SPX. So I have quite a bit of lines on here, but I'll make it a little bit more simple. So basically we had, so the two yellow lines that I have here, this one up here and this one right here, is kind of like a downward wedge that we have going on. Actually, sorry, my bad. It's the top one here and the bottom one here. So it's kind of been trading within this downward wedge. It got over, wasn't able to hold, fell down, retested it, fell down again to the bottom. And now we had the last 2 days, it actually rallied up above this yellow line, and it was en route to the top of this line. However, we hit this supply zone that I had previously, and it was not able to close over that on Friday. And now that we have all of this kind of like news from the weekend and everything, we had a major gap down, and we're going to fall all the way around this range. So next up would be a test of this level. The key thing here is if the daily can close below this level, this yellow line that I have here, that's going to be very bearish. And what will happen is something very similar to this day. So we had a daily close below, and what happened the next day is we actually gapped down very hard, fell all the way down to here, and it actually fell quite a bit during that day. It did, however, close above the line, but just because we actually fell below this and had a daily close below, that basically, remember, nothing's ever definite in the market. However, probability is very likely you go lower the next day because of the close like this. So this was crucial. The fact it fell all the way down here and then popped up, this is a bullish sign. However, there's a lot of volatility in the market right now just because everyone's crazy with the news. So it wasn't, a lot of stuff can happen like this where it falls really big and then gets picked up. So that is one thing to note. But because we're probably going to open around this range, it's going to be interesting if we can hold this on the daily. And that's going to be key on Monday to see if we hold it on the daily. If we don't, this thing is probably going to fall quite a bit on Tuesday or Wednesday of this week. If we can hold it, that is kind of indifferent. It could bounce off of that, or it could just fall the next day. So if it's honestly a better setup if we actually fall below, if you want to short the market the following day. And if we have that daily close below, I'm going to be looking at the put flow as well on SPY to potentially hit that 413 or 415 level. Because remember, it doesn't mean just because they had a bunch of 413 and 415s that it has to hit that level. That's just the strike that they chose. But it can be an indicator that we could go around that range and fall to that level. So something to note going forward. But other than that, definitely be careful this week. This week will be probably the most volatile week we've had since COVID times. That's my prediction. We have had a lot of volatility in the past week, so could be on par with that. However, with a cap down of 100 points on ES futures, that is pretty crazy. We have not had a gap down over the weekend that large since COVID times. So that's kind of what's provoking me to think that way. And also seasonally, it's a bit volatile in February going into March just because we have a lot of selling pressure then. So just be very careful. Keep your ranges fairly wide. Use less sizing because those ranges are going to be wide. And yeah, just make sure you can mitigate risk because remember, volatility is here right now, but it does not stay over time. If you look at the past, I'll check really quick here. If you look at VIX in the past, volatility is certainly prevalent at certain parts of our history. However, look at COVID right here. We had the 2019, 2018, and then 2017 back here. It falls down, and then we just stay grinding up after that. Doesn't mean that it has to happen in the future. However, in the past, volatility gets heightened for a bit, but it always ends up coming back down. So one thing to note going forward. But other than that, appreciate you guys watching the video, and good luck this week.